The review into the Reserve Bank has been handed down in the last couple of moments, and it recommends sweeping changes to the way interest rates are set in Australia. The Treasurer, Jim Chalmers, says the government broadly accepts the 51 recommendations from the report, including the creation of a separate specialist board to consider interest rates. Our business editor, Ross Greenwood, joins me now. Ross, take us through these key changes.
All right, so these changes have just been handed down from the government, and we can take you to really the broad changes as we see them from these recommendations. The first of these recommendations is, as you say, the creation of a separate monetary policy board. It means ultimately the Reserve Bank would have three boards. One would be a governance board overseeing the Reserve Bank, another would look at payments in Australia, and then the final one would look at interest rates specifically. The inflation target of 2 to 3% remains, but again, there is actually more correspondence that the Reserve Bank needs to address to try and keep inflation long-term in the middle of that target band of 2.5%. On top of that also, the Reserve Bank will in the future, and this will be put into legislation. This is the reason why legislative change is needed here, dual objectives of stability of prices and also of full employment. Now, this is important because in the past, it hasn't necessarily had those key objectives, but they would be key objectives in the future for the Reserve Bank. On top of that, there would be more information coming out of the Reserve Bank, and so therefore there would be press conferences after each meeting of the Reserve Bank. But one other important aspect of this is the recommendation suggests the Reserve Bank should not be meeting every month. In fact, it says that there should be 8 meetings per year and not 11 as there currently are.
Yeah, right, Ross. So this review does seek to shine a light on the way interest rates decisions are made in Australia, something that some argue, including the Treasurer, has been lacking in the past.
There's no doubt, and I think that's the reality, that we, in many cases, are not given the full story as to the way in which interest rates are set. Now, there's one key, line in this report that we've identified that really, I think, sums this up, and this broadly says to the Reserve Bank, the Reserve Bank Board composition currently and processes do not enable it to sufficiently scrutinise or challenge the RBA's underlying economic and financial judgments or policy advice. Effectively, what it's saying there is that the board currently rubber stamps the view of the governor or the executives of the Reserve Bank currently when it comes to interest rate settings, that they don't really have the power to be able to challenge it. They don't have the information. And so that's part of the recommendations here, that the new monetary policy board, that they have access to more of the information coming out of the Reserve Bank, that they're able to speak out in their own right and really, if you like, challenge it. There would also be, and this is important, a vote. So we would see the vote from the Reserve Bank Monetary Policy Board as to who voted for interest rate rises, who voted against them. And so this also would give you some sense of the dynamic and indeed the argument that goes on inside the Reserve Bank to help people make their own views up about the direction of interest rates.
Yeah, OK, let's get to the elephant. Perhaps Phil Lowe is the elephant here. His term expires in September. What's going to happen with him?
Well, I get the sense that he won't continue after September. I think that Jim Chalmers would see that these changes coming through would need, really fresh blood through the Reserve Bank, because one of the issues here is about the cultural issues inside the Reserve Bank, whether those dissenting voices inside the Reserve Bank, its own staff, really get enough airtime inside the decision-making, or whether they've been in the past simply dismissed and crushed. And I think that's a part of it. A couple of other bits of information we've got for you, and we can bring these sort of quotes up from this report as well. One says there's limited information available to the public about factors driving the board's decisions or how alternative viewpoints or policy options are weighed. So again, that's a really important one. And then accountability mechanisms for individual board members are lacking. So what would also happen as a part of the change to the Reserve Bank in the future is the members of this monetary policy board, who would be experts, maybe in industrial relations or maybe in inflation or price price setting, whatever it may be, that they would be expected to give at least one public speech per year as a part of their role on that monetary policy board. So if they're a dissenting voice, we would hear that dissenting voice. It wouldn't simply be, if like, groupthink from the Reserve Bank in the way in which interest rates are set. And I get a sense that that is the reason, perhaps culturally and historically, why Philip Lowe will be replaced as the Governor of the Reserve Bank when September rolls around.
Yeah, okay. So if I could just wrap this up and ask you, I mean, look, this is revolutionary for us, but it's not like these kinds of things aren't done overseas. Is the UK and Canada a good example of this double board type situation? And if I could give it a bumper sticker, if you will, Ross, it's more people, less meetings, more media.
Well, that's right. Yeah, there would be, that's precisely it. More people actually making the decisions, but also more accountability.
Yeah.
So they're encouraging more diversity of the staff inside the Reserve Bank. But on top of this, you're right to say that the model looks like the Reserve Bank of Canada. Caroline Wilkins, the chair of this review, was of course famously on the board and ran the Reserve Bank of Canada. So that's one important aspect. The second part about it is, with board members speaking out in their own right, that's more like the Federal Reserve in the United States, where you do hear the dissenting voices. So, you know, from the Australian public's point of view and businesses' point of view, this gives you more understanding, I guess, of the argument about why interest rates move the way they do. And so you don't get surprised when all of a sudden the Reserve Bank does something unexpected that you're really not expecting.
Yeah, right. Okay, Ross, love it. We'll hear from Jim Chalmers too very soon. Thanks so much.